Hi everyone, Dean here, and welcome to my channel. I'm back for another video where we break down what's really happening in Toronto's commercial and industrial real estate market. Today I'd be glad to give you an update on Toronto North market outlook for Q3 2025. If you've been following Toronto's industrial real estate trends, you'll know this region has always been one of the strongest and most strategic in the GTA, and this quarter is no exception. In Q3 2025, the Toronto North industrial market, which includes Vaughan, Markham, Richmond Hill, Aurora, and Newmarket, continued to prove its resilience. Even with broader economic uncertainty, rising interest rates and global trade challenges, this market maintained stability and investor confidence. Let's break down some key numbers. The availability rate stayed consistent at 3.3%, with 3% for leases and just 0.3% for sales. The region saw 2.85 million square feet of new supply this year, and another 868,000 square feet under construction. Absorption hit 866,000 square feet, showing there's still strong tenant demand. Now, on pricing, average net rent slightly dipped to $17.39 per square foot, down from $17.41, and average sale prices declined to $514.93 per square foot, compared to $524.78 last quarter. These small adjustments point to something important. The market isn't slowing, it's balancing. So what's keeping the Toronto North market so strong despite these small dips? It comes down to three main things: modern facilities, newer buildings with better ceiling heights and layouts, excellent logistics, unmatched access to major highways like the 400 and 407, strategic development corridors, especially along Vaughan West and Highway 400, where major projects like the 1.7 million square foot King Jane Business Park are taking shape. Let's zoom into the two key submarkets. In Vaughan, sales averaged $443 per square foot, with lease rates around $14.85 per square foot. Meanwhile, Markham, Richmond Hill, and Newmarket recorded average sales of $286 per square foot, and leases at about $15.48 per square foot. Even with minor pricing corrections, these areas remain among the most desirable industrial locations in the entire GTA. Looking ahead, we're moving from a market of record highs to one of strategic stability. Rental rates are expected to stay level, with smaller annual escalations, and leasing timelines are taking a bit longer. But make no mistake, demand for quality industrial space is still very strong, especially for Class A properties with strong transportation links. This shift actually benefits both sides. Tenants have more options and negotiation leverage. Landlords are adjusting strategies to stay competitive and maintain occupancy. So, what does this mean for you? For investors, it's a great time to reevaluate your portfolio and look for undervalued assets in prime logistics corridors. Tip for investors: focus on Class A assets near highways. They'll hold value even in slower cycles. For business owners, this is your window to secure long-term leases before rates rise again. Tip for business owners: lock in now to stabilize your occupancy costs and protect your margins. For landlords, flexibility will be your biggest advantage. Tip for landlords: offer incentives like fit-out allowances or phased rent escalations to attract top tenants. Overall, the Toronto North market is maturing beautifully, less volatile, more strategic, and grounded in long-term fundamentals. Whether you're buying, leasing, or simply exploring your options, having a clear understanding of where the market stands will help you make smarter decisions. And that's where my team and I come in. At GTA Commercial Brokers, we specialize in helping investors and business owners navigate Toronto's commercial and industrial real estate landscape with confidence and clarity. If you'd like a complimentary property valuation or to discuss off-market opportunities, reach out today. Let's uncover the right opportunity for your next move in Toronto North. Thanks for watching. Don't forget to like, share, and subscribe for more insights on Toronto's commercial real estate market. See you next time.